Hi, I'm John Fetto, Head of E-commerce Insights at Grips. Thanks for joining me today as I delve into the current state of e-commerce in the United States, where I'll take a look at growth overall and for several key categories. I'll look at Google Ad Spend as a measure of economic health, and then I'll dig into two key stocks that will be reporting soon. I'm excited to share with you the latest trends shaping the landscape, so let's jump in. We'll start by examining the e-commerce trends in the United States using Grips data, which, as you can see here, tracks very well with the official numbers reported every quarter from the U.S. Census Bureau. According to the Grips estimates, the growth of e-commerce revenue in the United States during Q2 2023 has been resilient, coming in a solid 3.55% higher than the same period in 2022. At the category level, we saw impressive growth year over year in segments such as car parts, grocery and beverages, pet supplies, sports, and more, all of which posted strong year over year growth. On the other hand, categories like gardening, furniture, and consumer electronics experienced contractions in Q2 compared to last year. These declines are not totally unexpected, though, as these are some of the categories that saw the most significant increases in e-commerce spending during the pandemic, and consumers just may not feel the need to reinvest in these categories right away. One remarkable standout is the ticketing category, which surged by about 35% quarter over quarter and a staggering 85% year over year. The growth was so strong it wouldn't even fit on this slide. And the Fed recently reported that live events like the Taylor Swift concert have had significant impacts on the local economies. And now let's dive a little bit deeper into a few specific categories, starting with furniture. Grips found furniture posted really strong growth in Q1 of 2021 due to the surge of pandemic-related e-commerce purchases. Of course, consumers have since changed course, and in Q2 of this year, online revenues for the furniture category declined by about 12% year over year. Some of that may be due to higher mortgage rates and suppressing investment in new homes and home improvements. But interestingly, Grips also observed from our robust SKU level database that consumers have also shifted their focus from buying higher ticket furniture items like sofas and bedroom sets to purchasing more decorative or affordable items, which is having a negative effect on furniture revenue. Similarly, the jewelry and luxury category demonstrated its strongest growth in Q1 of 2021, but growth was more or less plateaued by the end of 2022 before declining in Q4. Spending around Valentine's Day did help boost Q1 sales this year, but in Q2, Grips observed absolutely no growth for the category. And this volatility may partially be due to consumers switching from buying more expensive luxury items online to buying more affordable or everyday jewelry, making it more difficult for the category to post sustained growth. The pets category, of course, continues to perform well with a 10% year over year growth in Q2, according to Grips. That was the 10th straight quarter posting growth. As COVID-era adopted pets age, their specialized needs should create opportunities for more expensive products and services, which is likely to drive sustained growth for this category. Now, another way to measure the health of the economy is by looking at Google ad spend trends. And Grips is a leading provider of insights to the street on the performance of Google's advertising business. And you can see why by looking at this chart that shows a strong correlation between Alphabet's own reported earnings from Google paid search and display ads and what Grips estimates. In Q2, Grips found that globally, ad revenues for Google increased by 0.7% year over year. The United States, of course, outperformed the global average with growth of Google Ads revenue of 1.8%. However, when looking at just e-commerce sites specifically in the United States, ad spend was just flat, posting just a 0.1% increase year over year, which is a signal that there was some caution on the behalf of the e-commerce businesses in the United States. Now let's look at Etsy, which reports on August 2nd. Grips reports that Etsy's global gross merchandise sales, or GMS, declined by 4.7% year over year in Q2. When excluding non-Etsy.com marketplaces like Reverb and Depop, Grips saw that revenues declined by 4.6%. So what's behind this trend? In addition to reporting on monthly e-commerce revenues, Grips also reports on sessions, average order value, conversion rate, marketing channels, ad spends, and more, providing our clients with powerful insights into the underlying drivers of a site's or even an entire category's performance. And when looking at those metrics for Etsy, we see that sessions were actually up while average order values remain stable. So what's going on? Why is Etsy's revenue down? Well, it turns out that Etsy is really struggling with conversion rates, which have been on a steady decline for the past 2 years. Part of that's due to Etsy relying heavily on social channels to increase their sessions. Unfortunately, social is a channel that Grips has found to have traditionally lower conversion rates, which is a noteworthy contributor to Etsy's overall performance. Finally, let's examine Wayfair, which reports earnings a day after Etsy on August 3rd. Globally, Wayfair's revenues fell by 7.1% in Q2 2021, Breaking things down regionally, Grips found that Wayfair US saw a milder decline of just 5.7%, and things tend to be improving there. In Europe, however, Wayfair faced a significant setback, posting 39.4% decline in revenue year over year. Unlike Etsy, Wayfair is not driving higher sessions in Europe. Instead, sessions are falling almost as sharply as revenues. Combine that with a decline in conversion rates, which Grips has observed since the start of 2023, and you start to see why Wayfair is struggling so much in Europe. If you'd like to learn more about how Grips can help you stay on top of e-commerce trends and the performance of tens of thousands of e-commerce sites, I welcome you to sign up for a free trial of Grips by visiting www.gripsintelligence.com. Thanks for joining me, and stay tuned for more updates. See you soon.